I request you to stay back on the stage for our next session. Now, let's welcome our esteemed VC panelists for a discussion on shaping the future venture capital insights for Indian startups. Please join Neeraj on the stage, Rajat Tandon from IVCA, Anjani Bansal from Global Brain, Amit Sharma from Cactus, and Addison Appu from Think You Wait.
Welcome again, Amit. Please have a seat. Wherever. Anjali. Listen.
These investors plays a crucial role in supporting Indian startups. Let's hear their insights. A champion of Indian startup growth, Rajat Tandon leads the Indian Venture and Alternate Capital Association. He spearheads advocacy for public policies that fuel this growth. Previously, Rajat's leadership at NATSCOM's 10K Startups initiative played a pivotal role in nurturing and scaling tech startups across India. His proven experience spans leadership roles in IT, telecom, and other areas. Anjani Bansal leads investment in India and Bangladesh for GB Venture Capital, a Tokyo based firm boasting over 100 exits and $2 billion in assets. His investment focus falls on seed to B stage companies tackling large scale challenges with disruptive technologies. This emphasis on innovation and scalability is a key driver of his investment decisions. With over 15 years of experience under his belt, Amit Sharma brings a proven track record of identifying high growth startups to the table. He has been instrumental in securing successful exits for companies like Cred, Gig India, and Crazy Bee. Prior to joining Cactus Venture Capital, Amit led India investments for the EWTP Capital, an Alibaba backed VC fund. As a partner in Think You Wait, Addison Appu oversees investment across India and Southeast Asia. His expertise spans a wide range of sectors, including health tech, fintech, and AI and machine learning. He has a keen eye for promising startups in these dynamic areas, leading numerous successful seed, pre Series A, and Series A investments. Neeraj, you can start.
Thanks, Nidhi, and then welcome everyone. So, guys, I think this will be a great panel discussion. We have a pretty diversified set of um, panelists from the venture capital industry sitting here with us. Um, and I think this might be for the founders. This might be a good learning that in current times, what is changing? Look, there are a lot of news that is floating around in the venture capital world right now. One is on the funding winter, which seems like it will never end. It is continuing, and it is continuing, right? And then on the other hand, there are startup-based issues, the growth issues that are emerging. Be it Byju's, Paytm, and many more, right? The big names, the poster boys are falling apart. In such scenarios, how VCs are thinking on their investment strategies is what we want to discuss today, right? So let me, in interest of time, let's start quickly. My first question is to Anjani. Uh, I don't know if I caught you off guard. So Anjani represent, as Nidhi explained, a Tokyo-based, pretty large venture capital fund, very diversified sectors. Anjani, you focus on, and you look after the India Bangladesh market as a focus area. So what are the sectors, Anjani, you are focusing on here, and how you zero down on that? Means what are the things you are looking for in these markets?
Yeah, great to be here, Neeraj.
Is it
Looks like it's on.
okay?
Can guys at the back hear me? This is not working.
It's not.
Can I just try to speak loudly?
I think people behind could hear you,
Can
but
you hear
in the front couldn't. So that's pretty strange, maybe the acoustics here.
Okay, I'll just try to speak a bit louder.
Very strange.
So yeah, great to be here, Neeraj. And I first of all, I really enjoyed the presentation about Xscale.
Thank you
I
so much.
honestly learned a lot. So that was great. Good way to start the day. And good to be here at IIT anytime. Engage with investors and entrepreneurs in the audience. So to answer your question, as a Japanese fund which invests globally, India is still an evolving part of our portfolio. So our target is to invest in 7 to 10 companies in India every year. Globally, we invest in about 50 companies. So India is still emerging as an asset class for us. But what differentiates this particular geography for us is that the investments that we are making in India, we are trying to focus on companies where we truly believe that very large outcomes are possible. So we are, and as a result, there are certain areas which still make sense for a for a VC fund, but we are not necessarily focusing on those areas. Where we think we see those large outcomes are essentially six key building blocks that we believe are for the Indian economy, which include financial services, healthcare, manufacturing and construction, deep tech, agriculture, and climate tech. And these are the six areas where we are putting a lot of emphasis in our sourcing. And of course, within each of these sectors, there is a lot of nuance. Just as an example, in case of financial services, we believe a lot of opportunity exists in areas of wealth management. Similarly, credit for small businesses, insurance. And so we double click on each of these areas to identify those specific subsectors where we see a strong pipeline and a large market at the other end. And that's how we go about it.
Fantastic. Thanks, Anjani. I'll move to Amit. Amit, I think a similar question uh, for for you as well. So you come with a lot of research background, right? You handle investment for Alibaba backed fund, right? And then again a foreign capital, and now you are managing India-based fund, right? What is your sector focus in that sense? What is difference from early experience versus now in that sense?
Yeah, thanks for inviting me here, and good to be here. So for us, the key theme or the key focus area is to identify sectors which have long-term sustainable growth trajectory.
Sure.
So what we try to look for is, does the economics or the economy of the country is aligned to that? Are the requirements that are there are aligned to what we are looking for? And that helps us in a way to avoid the fads which are there in the market.
True.
So as a fund, while we have a relatively broad mandate, but the focus sectors for us are healthcare, clean, and software as a service. Health, primarily, we have seen it's a perennial need. We are going to see continued investments there. And currently, unfortunately, the country requires intervention from technology side because resources are limited, right? Uh, on the clean tech side, I think this is a global need, and we're probably already relatively late to start addressing that. While what we see is the companies are relatively in a slightly early stage at this point in time for our liking, but those are evolving in certain sectors. And SaaS, primarily, we believe that the India demographic dividend is here to play for a long period of time. So that effectively gives us comfort to invest in that sector. We can build for the world from India. An add-on that we are incrementally seeing is manufacturing, like Anjani also mentioned. We are seeing a lot of China plus one stories. India, despite being a large market, doesn't account for more than 2% of the
True.
electronics manufacturing. So we recently made an investment in that space. So those are broadly what we look for: sustainable growth stories where we see long-term growth potential, and we look for solid returns, not the 50x's and all that. Something more sustainable. Yeah.
Got it. Got
Yeah.
it. No, thanks, Amit. Edison, if I can ask. So you invest much earlier from where I would say even Amit or Anjani come for a startup journey, right? Where sometimes product is there, sometimes it's not fully there, sometimes revenue is there, and then sometimes it's not even there. Your judgment criteria. What are the key judgment criteria you hinge your investment decisions on? What are the few things you look for when you make your bets?
Thanks, Neeraj, for inviting me and for that question. So, early stage is gazing the crystal ball. Okay,
Yeah.
it's very difficult. Having said that, we bet on the jockey and not the horse. There are so many ideas flying in and out. I have personally looked at about 12,000 odd opportunities. We have invested in 22. So as far as the strike rate is concerned, you can understand a lot of filtration happens. But the five critical factors at an early stage, and of course, Amit and Anjani get a baked product. So when we look at it, it's a raw product. So founder and the founding team is the most important ingredient in the recipe because the money is given to the individual and his execution capabilities. So it becomes paramount that the judgment on the founding team is the most critical assessment you have to do. Second is, of course, the size of the market in which they want to play. And when I say size of the market, how deep it is, how big it is, and in certain cases, even niche markets make a lot of sense because then you will have at least an oligopoly structure where three or four people can rule the roost.
Sure.
Third critical factor is traction. So traction is divided into two categories. One probably would be your the MVP or the prototype, which is we call minimum viable product, which is rarely like up to Series A, you still are finding your product, right? And then there's the product market fit, which is basically your Series B and Series C situations. So traction, I mean, we have invested in companies which have shown us uh, monthly revenues of say only 5 lakh rupees, right? And now they are sitting on $1 million revenue. So, but we don't invest in idea only.
Oh,
So the idea is that
there has to
the
be.
idea has to be. I mean, if there is no takers for that idea, you are just wasting your time. So some sort of paid POC makes a lot of sense. Fourth critical aspect is competition. Neither we do we want no competition, and neither we want excess competition. No competition means that you will have to spend dollars to educate the market.
Market building. Yeah.
So that is a long term game, and you require a lot of deep pockets for that. And if there is too much of competition, then it will be a price arbitrage where you will not have any defensibility moat around it. So the idea is to understand whether the product is and it boils down to just two simple things. Either you have thought about it first or you are thinking differently. That is the only way you make money. So thinking first is innovation, and thinking differently is creating efficiencies in the system through technology. So if you have both things, then you make money. And fifth is, of course, the entry point of the valuation because it's a relay race. We'll have to pass the baton to Amit and Anjani later on. So if you don't have that headroom, then neither I make money, neither he makes money. So these are the five critical factors: founder, market, traction, competition, and entry valuation.
Perfect. Thanks, Atan Edison. I'll move to Rajat if we can. And Mohit, if you can get the mic check, the second one is not working. Okay. So Rajat, I think see funding winter I've hinted towards, right? And then on one hand, how to tackle funding winter is to enable the VC ecosystem. So while VCs enable the startup, Rajat and the IVCA help enable the VC ecosystem as a whole, right? We need to have a thriving VC ecosystem such that the money is flowing in from different quarters and then to make it work, right? So Rajat would love to hear from you. from an overall VC industry standpoint, what are we are we are doing, right, to enable this ecosystem. So at a high level, if you want to talk about, right, because I know this audience may or may not be fully aware of the great work that IVCA is doing.
Neeraj, thank you very much and thank you for the invitation. Just before we start, how many of you over here are startups and how many of you are investors? How many startups? Lovely, lovely, lovely. Investors? Not bad. Ramnik, we're on to putting up your hand for both startup and investor. We had an interesting conversation this morning. So yeah, I mean, climate efforts, climate platform, great stuff. So congratulations. Neeraj, congratulations on this X pricing. And I was just wondering if a plugin can be there for X valuation as well. If you've covered all the aspects of it, introduce valuation as well, which will help most of the investors sitting on this table.
Absolutely, yes.
So yeah, so again, so at least it's a great start. Coming back to very quickly what the IVCA does.
Yeah.
If you're all aware what an automotive association like CIAM does, they don't manufacture cars, right? But then they support the ecosystem.
True.
That's what we do. We are enabling this ecosystem. And probably we just have a little bit of a mission statement which says, just like their mission statements, at the end of it, their actual actions are earn, right? So we also defined our mission statement around earn. E stands for education, which happens to be the most important, because as the number of startups grow in this country, we need to have investors also growing. So the fund managers need to grow. There are certain fund managers which are global, and then there are fund managers who are domestic. You'll be surprised to hear this, that SEBI registered. That means if you're a fund manager in India, you register yourself under the SEBI. The number of registrations for a scheme, that means a fund manager may have one or two or three maybe max out schemes. From a 340 about just a year ago is 1350.
Yeah.
So IVCA today has a membership base of 370 members who are investors. Not only, so we deal right from the VC level to the private equity level to also to all the alternates. That means whether it's venture debt, whether it's credit, whether it's real estate, whether it's infrastructure. So across all the platforms, we are looking at how we can make sure that there's ease of business for these guys, whether they are coming in from outside or we are enabling pools of capital in India to grow.
Sure.
To your question, funding winter, I'm not scared. I'm scared about funding startups. And I think that's where most of the people over here may be also thinking about. As we grow, yes, we've registered to be the third largest ecosystem in startups. DPIIT registered at 130,000 or upwards of that. I think it's time for us to look at these startups. How many of these startups are investable? If you're not investable, that means you're building for your own fun. So let's stop that, and I think let's make sure that our interests are focused around here. The investors in the last 7 years have put in about $270 billion, which is, today, if I look at an annual investment, except during this period, which was the COVID period, where the investment peak was about $65 to $74 billion, which came into the country that year. Our stability is around 30, 35, 40. 7 years ago, this was less than or close to about 12 billion. So from a 12 billion, we are upwards of 34 billion. India is the third largest investable ecosystem in the world today on tech side as well. So in terms of, yes, I think it's the opportunistic moment which the VCs look at. Certainly there's ample lot of money in early stage. There is good money in growth stage as well. So as you all guys, I mean, you people are looking at putting your startups, I think the startups focus should be around scaling up, which is what will bring us on the map where, the other countries have done phenomenally well. At the association, just like I said, education is earn part of the ER, and E is for education, where we are helping new fund managers to actually understand this ecosystem, help them to understand what the regulator needs. So a lot of work is around working with the regulators, right? The advocacy effort which the association does is basically making sure that we are the bridging gap between the government and what the investors are actually looking at. R is part of the research which we do. So a lot of data, a lot of reports, which are thematic, are published by the IVCA, and all these reports are available on our websites. Recently, we were doing one on agri-tech. We've put across a council for climate, so and a clear focus around climate and how green banks work. And I think we are working extensively with the government on putting papers on that. We look at why Japan. We've put across a paper for Japan, how investments from Japan and specifically from infrastructure can come into the country. So I think that's a lot of research and paperwork which the association does. And finally, it's about building the networks. We try and get the LPs to the country so that our GPs can get funded, and they can just like, if you thought getting a startup funded was very challenging, believe it or not, this is 10x. A funder getting money from an LP, nobody gives you money. Nobody gives you money. All right. And once they give you the money, they expect the returns. They may keep quiet for the 5 or 7 years, which is what they call as the patient capital, what they deploy. But then, they're not quiet after that. They'll bring you down. Right. So, I mean, funds today, last year, we added close to 90 new fund managers to the association. So, our task was to make sure that they are scaling up. We did a course which was called a VC 101, right? And this was primarily for them to understand, guys, it ain't a piece of cake. Getting anybody's money. Here is how you build your. This is how you get your money. This is how you build your strategies. This is how you build your PPMs. This is how you comply with the government. This is how you go for an exit. So all this was done by the association with the help of the senior members who are 2 or 3 or 4 times who've already raised their funds. So clearly, there's good traction. 85% of the money still continues to be international. We are seeing how more domestic pools of capital and investors and HNIs can actually start participating and helping our own Indian grown fund managers to be investing in us. So, I mean, I start that back to you.
Thanks, Satan, Rajat. I have a couple of follow-up questions, but I'll just go to Edison for a minute. And I know Edison has to take up an important call. So Edison, for you, I just want to know. Sorry, is
It's
my mic
working.
working? Okay, perfect. So you've spoken about 12,000 deals you evaluated. From where you get all those deals, by the way?
Very, very good question. So, this is my 21st year in the industry.
Sure.
So, good friends across different segments. Having said that, in the day age of social media, having a profile on some of these platforms like, people reach out through LinkedIn, through
Sure.
Twitter. We have our own website. I'm part of NASSCOM's Deep Tech Council, some university accelerators. So the funnel is long, and friends who are in the CA community, the banking community, the lawyer community, everybody now has something
True.
and some startup to show for. But because we are cross border, this 12,000 number also includes a lot of startups from Southeast Asia,
Wow.
US, and Australia. So on an average day, we get about 3 or 4 pitches. And that is how that number has swelled up to 12,000 over the last 6, 7, 8 years. But the criteria is, we look at everything. We have a since, I mean, when I look at a deck now, I know what to look for, and that has come from looking at so many pitches, talking to so many founders. And to add to what the funding winter, quote unquote, is being discussed, I think lot of money is chasing very few good assets.
Yeah.
So it's not that there is no money in the system. Money is there.
Completely agree.
What is the problem is that when you are trying to deploy, so every industry goes through cycles. So we went through a cycle between 2008 till 2013. That was a cycle where so-called startups, that whole segment was born. From 13 to 18 phase till the, so I call it birth of Flipkart, sale of Flipkart to Walmart, and then between that we had a black swan event like COVID, where every country printed money, everybody got funded.
Yeah.
You can make two types of businesses. One business great for yourself, which ranges from 1 crore of revenue to say 50 to 100 crores of revenue.
True.
That may not be funded or investable.
Yeah.
What a VC looks for is any business that can grow from say 10 crores to 1,000 crores or more than that. The scale, the multiplier, the impact. So all that we have seen in the 12,000 startups, and the sourcing funnel is just exhaustive. So university accelerators, incubators, law firms, CA firm, banking firms, LinkedIn, social media, all across.
Fantastic. And how much time do you spend in evaluating all this startups? How do
We
you
work
come up?
as hard as a startup. The problem is sometimes I am looking. I'm looking at health. I'm looking at education. I'm looking
Yeah.
at agriculture.
True, that's-
So I live on borrowed knowledge. I would have studied something in school, college, and then my postgrad. But now uh, the young generation is much smarter, but less receptive. So, so, so the idea is, so we kind of whatever was given to us, we wanted to learn and execute. They come with the execution plan and the mandate that I want to do this. So sometimes even get that this is not my skill set. How will I do this? But then once the reception grows, I think we are at the same stage what US was in the late 80s in terms of this industry,
Sure.
where maturity is kicking in. People are talking about unit economics. People are talking about profitability, and that is very important. At the end of the day, whoever has studied accounts and finance would know that in a balance sheet, your even your DCF calculation starts from a positive EBITDA.
Yeah.
So if you're not making any profits, how will you return shareholders' money? I mean,
Exactly.
your EPS, all the listed stocks is the EPS is what your net income and market capitalization divided by your net income. If there is no net income, then there is no EPS, earning per share. So why will somebody subscribe? So the industry is evolving. I don't think there is dearth of good startups, and believe me, there is a lot of money in the ecosystem. At least between the three of us, we are sitting on
So guys, you
good
don't get the money
corpus.
once they get out. You
But
just get the
having
money from
said
them.
that, people should have, when you're building, you build for solving a problem,
Sure.
which is very very important. It's not quick fixes. And second is you need to understand that exits matter, because your credibility is also defined by whether you have taken a company from scratch to an IPO or you have sold it to a larger player. So for a entrepreneur, for a founder, that is also a very critical factor. Same is the case with VCs also. We have whatever money we have raised, or we have put in our own money. We want to see some returns on it, right? While there is an impact, while there is a giving back to the ecosystem, but at the end of the day, there has to be profits.
100%. Thanks, Edison. I think follow-up question is to Amit, and exactly continue on the same.